guys? Welcome back to the Diamond Hands Trading Channel. My name's Barney XBT, and today we're going to be going into the importance of timing your trades. That's with your entries and your exits. And we're going to be going into the importance of that, why and how. So how do I spot? How do I know when the right time is? I know a lot of traders, especially beginners, have that question. I'm going to try and answer that as briefly and to the point as possible for you in this video. So let's just hop right into it. Why is it important? One, you are going to be less time in the market, and the less you are in a trade, the least amount of risk it presents to your capital. So you don't want to be, say you think Bitcoin's going to go up. It was currently at 16.5, but you really had no confirmation to go long yet. Maybe you shouldn't. Maybe I should wait until I get some more confirmation. I can buy higher once I know we're in a bullish trend. Because at that moment we were kind of undecided. It looked like it could probably go down to like 14. Everyone was calling for another leg down, but we had no confirmation that we were going to make a leg up until we really reclaimed that 17.6K level. So I'm going to go into that in a moment. So we'll move on to point 2, less emotional stress. So, if you're perfectly timing your trades, not only is it less risky, it's going to be a lot easier to manage your mental psyche while you're trading, because you don't want to be all over the place. It can, anyone who trades, how it is. So we want to keep that emotional stress as minimal as possible. Next, it's an effective use of capital. So, I want to be only risking my money, my hard-earned cash, when I think the time is, the perfect time. So I'm going to get an increase on that cash. I don't want to be losing money and, take the risk too early and then end up missing it and take it too late. And then, So we're going to go into that in a moment. Next, how do I time my trades? Well, we're going to go into 4 different points. I'm going to break them down. First off, it's going to be very important that you identify strong support and resistance levels of the asset you are looking at. So you want to learn how to do that. I have other videos on my channel. It's very simple in most cases. You'll just use a trend line, a horizontal ray, and just mark out levels that where price has rejected in the past, prices it has found support and bounced in the past. And the more times, the better. Then this makes the level you're marking more valid, right? So you're going to be using those levels to identify whether it's a good time to go long, it's a good time to go short, and you're just going to stick to that trading strategy. Point number 2, confirmation of your trading thesis. So how do you time it? You want to be, in my other videos, how to scalp, you're going to be, if you're trading the range, you're going to be, waiting for confirmation. So price is pumping up, your resistance level is maybe, 17.6K for Bitcoin. It came up, rejected, and then starts, maybe wicks above it a little bit, comes back down. That is a confirmation that the level you have as resistance is still valid. We're not like pumping through it and having a high time frame candlestick close above. So you want to have confirmation of your trading thesis. You don't want to jump into stuff blindly. So that's number 2. 3, stick to your trading plan. So like I said before, if you are trading the range, stick to that range until proven otherwise. So a breakout of above the range would be bullish, a breakout below the range would be bearish, and just simply play in between it until you have those confirmations. 4, do not act solely on emotion. So just because, I posted in the Trading Telegram today that Doge looks good. I know when Doge starts to pump, it runs. So if you don't get on board, you're going to miss the train. So it's very important to know when to get into that trade. So I'm not entering right now. I'm not just going to blindly, I think it looks good. Just, I could go long now. I could still dip another 5% and still be bullish, right? So it's not an effective use of capital for me to just simply use my emotions. My trading thesis might be right. It does go up 30% in the next week or two. But if I jump in too early, I could put, and maybe over leverage, over risk, I could get knocked out, stopped out, whatever, before that happens. So you want to stick to your trading plan as much as possible. Next, I'm going to go into some examples. We're going to look at a chart, just go over these simple principles of trading the range and stuff like that. I'm going to make it real brief. I don't want to make this video too long. And yes, let's hop into that. The first chart we're going to look at, we're just going to look at Ocean USDT. This is the crypto we're looking at on BYBIT. This is currently the daily chart. So each one of these candlesticks represents a 24-hour period. And we're just going to identify some support and resistance levels to start off. So I know right before the FTX crash, right around here at 24 cents, see how this candle here on November 3rd came up, wicked to that area, and then ended up closing down here. I know that's a resistance level. And then that thesis is validated by looking at how price reacted to those levels after that point. So you can see the next day, wicked above again, still closed below it. Third day, made one final push, but closed right on it. So that's still like resistance, you know what I mean? Like it came all the way up. Every time it goes above this level, either closes below or right on it. Then here, November 6th, we see that it came up and then started coming down again. And like that time, like once it got to right here, that's where I would be like, okay, it's time to go short. Once it gets back below here again for the third day in a row, it was an easy short. So you could just go here, post it up there, and then simply put your stop loss like either this, your target to this low here, or even maybe those highs. That's where I would have taken the trade. I wouldn't have expected this, but it all happened so fast, you would have just ended up catching a 50% dump if you had gone short. And it was just so easy. Invalidation levels, it was kind of a wide stop, around 11%. If you're going to the top, you could have narrowed that down to the, that wick there. And that's why you would have went short. Now, why was it important to wait until you saw this third day? Because, we're paying attention. We know that, okay, it's resistance. Came up again. Like at this point, you're probably like, oh my God, it's bullish. It's flipping into level. It didn't. That next day, oh my gosh, we're back above it again. But then it closes on it. So once I see that like the third time, I may have tried to short here that day before, and my invalidation level would have been the same. I wouldn't have been stopped out. I probably would have been a little salty that it went up on me again. But as soon as it came back down, I would have known it was confirmed, right? So going short here on November 5th, if you zoom in a little bit, would have been, we don't have really that much to go off of yet. It's kind of risky. The third day in a row was the kicker. And then we had one last retest 2 days later of that level. So it ran all the way back on you, which you would have been upset if you didn't take profit. That's why I always encourage you guys to take partial profits if you're in a good trade. Because, even though you were right, you could have taken profit here and then added that on once you saw this rejection. So you're just compounding the trade and making even more from the trade than you had originally planned. So that's why we went short, or would have in that case. Now looking here, let's look at something current. So something that hasn't happened yet. First off, we had this high at December 9th. It was kind of like a little resistance level. So you want to create a range. I can do like this. That's kind of like the levels we were going through from this point. Maybe even drag that from here. Let's see. Yeah, so it was very bullish price action. Kept making higher highs, higher lows, again, and again. Until the other day, I guess January 3rd, we just started to take off, right? So there's multiple ways you can have your confirmation. I could have just drawn a trend like this, right? And just my trading thesis would be, if price was to come below this trend, wicking down is fine, like it did here, but if it closes below, comes back up and like is struggling to get back into it, that's, I would have went short here. But, you can stick your trading plan until proven otherwise, like we do with trading the range, longing the bottom, taking profit the mid-range, shorting the top, etc. Like shorting here, take profit around the mid. But the thesis would be go long whenever it taps the trend, and you're proven wrong if it has like a high time frame close below. So that depends on what chart you're looking at. If you're basing your trade off of the daily, then you want to have not as much risk. Not as much risk because the stops have to be very wide to prove you're invalidated. You don't want to be over risked and end up being stopped out of the trade when you were right, because you could have possibly missed out on this move here, right? So now current, we have the same level we marked out earlier, 24.5 cents. We had a nice daily close above that level, barely, but we had it. And now this day is now making a new high, targeting this level. Let's see. Yeah, so now we're kind of like, this is the new range I'd be looking at almost to like day trade or scalp would be between these 2 points. And you could go down on low time frame now and see how that's accurate. See this little range I just drew? So we broke into it. This is our new range, rejecting midpoints, finally get over, treat as support, slight fail, get the top, and now we're still holding the midline as support. So really, the probability of taking a trade at the midline isn't your greatest idea when you're trading a range. You want to be taking trades at both A and B points. So I want to be going short here with like invalidation above that wick, or if I start seeing like a close above and it starts treating as support, then I want to get out of the short, right? Because that would be considered a breakout, a bullish breakout of the range. And the opposite is the same for the bottom. So you want to go long the bottom until proven otherwise that it goes below, closes there, and then struggles to get back in if it does have a little slight pullback. That would be short entry, invalidation above maybe one of these highs, right? Or maybe even above the mid-range. So that's just kind of up to you. That's how you would time your trades if you're trading the range. You want to be looking for those breakouts, and that's ocean for you right now. I personally would not take a trade at the middle. You could, because you have a tight stop loss. Just put your stop loss right there. You might get wicked out. You don't know. You know what I mean? You want to time that perfectly. To me, it makes more sense to wait for these 2 points to be reached and then make a decision off of the information you have available. All right, so hopefully that's helpful. I don't want to overdo it with the length of the video. And yeah, like and subscribe if you found this video to be valuable. Join the community Telegram. I'm always posting charts like this and my trades, and I encourage you guys to post yours so we can bounce our ideas off each other. And yeah, I think that's it. Have a great day, guys. Good luck trading.